Good morning. What's up, guys? Happy Midas Monday. We are live, baby, and ready to get to work. This is bar number 7, which historically has been a hell of a bar, at least in the past. Well, if you go back like a week ago and then a week prior to that, that whole like week and a half range, bar number 7 here was our golden child. So let's see if we get something here on bar 7. We're 4 minutes, 26 seconds out. You are looking at a 5-minute chart on NQ. Of course, this is the December Nasdaq futures contract that we're trading. I'm copy trading NQ and then also across to MNQ on many of the accounts. But we are trading off the NQ chart is what you're looking at here. I'm trading Take Profit Trader and Apex accounts. You guys ready to get to work? Let's do it. Good morning. Hey, Bruce, how we doing? John, good to see you, brother. Lurt in the chat. Good morning. Rose, how we doing? Derek, what's up, brother? Good to see everybody, all the regulars. Manga, how we doing? All right, let's do it. 340 out. Let's see what we get. Hey, Trev, what's up? Stealth, Cheryl, how we doing, guys? There's our push. There you go, 7. All right, ATR is a little low here this morning. We're sitting below 22. Granted, we're only, 7 bars now into the day. We'd like to get that ATR up above 30 if we can. Anything above 10 is workable. Anything above 15 is better. Best is above 30 there on the ATR, but below 70. Between 30 and 70 on the ATR here on the 5-minute chart on NQ is kind of ideal. That's the best place for me to sit, at least as far as trading RAM, within reason using prop firms. So let's see what we get as far as a close here on bar 7. Nice clean bull body. We might have something here. Got to keep an eye on that trading range, but nothing really actually developed thus far. So that is speculation at this point, which I'm willing to bet against if we get a clean bull close. Meaning, if we get a clean bull close, very little wick up top, we may just have a stop limit buy here for the bulls in 220. Let's see what we get. Hey, Mike, good morning. Come on, bulls, prop that thing up. Nice little push here on NQ. Now we just gotta see if we can hold this thing. By the way, how we doing, you guys, to kick off the week here? Again, Midas Monday here today. Are you guys trading evals or fundeds? Or both? A lot of you guys are finding success. But if you're not yet, you will. Don't worry. It's only a matter of time. You remain disciplined. You trade a logical methodology that is based on something real like price action. And then you stay patient and you have the discipline to not do things when you need to not do things and to do things when you need to do them. That is also discipline. Don't trade too big. I mean, listen, guys, realistically, if you can have patience, discipline, and if you can dissolve your ego in this game, you're going to do really well. That's just the reality of it. And use your brain at least half. You're smart enough to make this work. The smartest trader does not win, believe it or not. There's a lot of really smart people who are not good traders or who would not make good traders because they try to outthink everything. The reality is you got a plan for a reason, right? If you have a logical plan, in a lot of ways, it's almost like you could say the dumbest, most disciplined, most patient guy wins, makes the most money. All right, here, let's see. We are 11 seconds out. I'm going to go ahead and get the copy trader engaged just in case we get a big ol' pop here out of the bulls. Last second adjustment. That wick is way, way too big. So we will go next bar here, bar number 8, and see what we get out of 8. Big ol' wick out of 7. Not interested in that. Funded and evals. Funded some evals and a personal. Couple of evals. Are some of you guys onto the scaling process? I know some of you guys are because you tell me inside of the tomb. But listen, guys, once you have positive expected value, I'm telling you, you got to scale. You got to scale. Don't wait to scale. Listen, you're going to look back, and if you don't have positive expected value, just don't listen for the next minute. Okay, but if you're like, okay, I have reason to believe that I'm a reasonably profitable trader, and I think I have an edge. If that's you right now, listen very carefully. 10 years from now, you're going to look back and feel really fucking stupid for not starting to scale as soon as you could. You're going to be like, wow, I could be twice as big right now, but I was such a bitch. I traded one eval. Oh, I traded that one funded for like 12 months. And I had edge. I was taking payouts. Don't do that to yourself, man. I always say, I really think that, most of us are going to live longer than we expect with the way that the world is going. Truthfully, that's not like a feel-good statement. That's just, I genuinely think that to be the case. But that doesn't mean that you just have unlimited time, dude. When you have some edge, even if you're like, I have some edge, but I'm not perfect. No, I'm not perfect. Dude, no one's perfect. I'll be a better trader 20 years from now than I am today. No shit. I'll be a better trader this time next year than I am today. Of course. You will too. Doesn't mean you just shouldn't scale. There's a lot of really, 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 really rich traders who are like, dude, I'm pretty good at this, but I could be way better. Like, doesn't mean you can't make money in the interim, right? Okay, minute 55 out. Roy, good morning. How we doing? Minute 5. Bulls, what you got? Come on now, give us a nice clean close. Pushing into all-time highs. It's quite the move. All right, we better get ready here. In case we get a last-second pop-up side, we got to put something on. 17 seconds out. Copy trader engaged. Come on, bulls. Pop us higher. Give us a nice clean close above the previous bar. That's bar 7. Wick high. We're not going to get it, are we? Ugly, ugly doji. Whole bunch of insecure bulls. All right. All right, let's see what bar 9 here brings. Yeah, listen, I mean, you guys know my mentality about trading, and I think it's the most logical. Listen, gaps tend to fill eventually. But nobody, I shouldn't say nobody. Maybe there's some guy in Wyoming making, 80 grand a year trading gap fills, whatever. Almost nobody is making big, consistent money. And don't come back and say, oh, well, institutions do. Okay, are you Morgan Stanley? Do you manage 20% of Morgan Stanley's assets under management? Is that you, big dog? What are you doing here? Shouldn't you be at work? Okay, no, clearly that's not any of us. So, no one, almost, is making a lot of consistent money saying, intraday at least. I'm not talking swing traders who hold positions for 4 months. Okay, don't give me that shit. I'm talking intraday. No one is looking at this today who's a really good, very profitable, super wealthy trader saying, 95% chance we're going to backfill that whole gap that we gapped up overnight. Let me get short. I'm just going to get short. Okay, what's your stop loss? Don't need one. It's going to fill. Idiotic. That's insane. If it fills, great. I'll short it on price action RAM setups the whole way down. But I'm an intraday trader. If that gap fills today, tremendous, dude. We'll get a big old bear trend, go 400 points downside, fill that gap, and we'll make a whole bunch of money. Great. But if this thing shoots to 26.2 today, I'll do the same thing to the long side. I don't care. Read the price action. If it ranges all day, man, we'll figure it out. We'll try to do a little continuation inside of the range if it's wide enough. If not, maybe we'll have to trade the range a little bit. No big deal. All that to say, what is my point here? Don't get your heart set on something just because you've heard some idiot say, gaps always fill the next day. That's not true at all. They're wrong entirely. They tend to fill eventually, usually, just because the market tends to be back and forth. And by default, you end up filling gaps, usually, but not always. Not always. If you trade with that mentality that gaps always have to fill, you will get blown out eventually. Really, really bad. And they especially do not have to fill same day. But listen, today, fuck, I hope it does fill, because that means we get a huge bear trend and we'll make a whole bunch of money shorting. We'll make 40,000 today. But I'm not going to go into the day saying this pump is going to fade because we have to fill that gap. That's dumb. But as I always say, man, do whatever you want. Do whatever you want. All right, we're 35 seconds out. And so far, bar 9 is bringing us a whole lot of nothing. See if the Bulls can flip this baby green. They got it? I don't think they got it. All right. Bar 10, clean this up for us here. If we can get a big old dump off here, next couple of bars, that would be beautiful. ATR is 20. But I gotta tell you, I would love to see 10 and 11 here just be big, big, big bear bodies. Because you know what I would try to do, right? If it lined up right, stop hunt the low at 2. Taz! Nico, Friday I lost an account that needed 500 to pass by holding after 5 o'clock. Thought I closed it, but I didn't. That was very painful. It happens, man. I don't know if I've ever done that exactly. I don't remember. I feel like maybe I've done that once. I don't know. It's a habit now. All right, 10. Let's see what 10's got. 3 minutes out. You got to make it a habit. Listen, like, be a little obsessive about it. Whenever I go to close out Rhythmic Ninja, I always triple check. I look through my Ninja, the copy trader. I look in my position window from Ninja Trader itself, and then I look at Rhythmic. And then it's like, okay, so there's nothing, including the take profits, there's nothing. And then I'm like, okay, let me check the Rhythmic accounts. And I scroll over and check the working orders and the positions and stuff and make sure there's nothing. And then I close and walk away. That's got to be a habit. This is happening to you guys too often. I've heard this like 2 or 3 times in the last week. You got to stop doing that. But I mean, listen, I get it. So, you know, it just takes one day that you slip up. You're like, oh shit, I'm late. I'm late for my appointment. I got to run. And then you come back and you blew 3 accounts because you had a position on. Just make it a habit. What's up, Eric? Yeah, YouTube recently last week. I think it was Thursday or Friday. I don't know why. Is it everyone's stream, by the way? Can someone let me know? Is it everybody's stream or is it just mine? For some reason, YouTube is using the handles now instead of the names. I don't know why. Yeah, I think it's a YouTube thing. All right, Bar 10, what you got? Oh, that's a good point, Christopher. They might be trying to crack down on bots, which is actually really, really good. Yeah, I mean, listen, for those of you guys, by the way, who are in the free Discord, or the Tomb for that matter, or right here on YouTube, if you ever get a response or a DM from someone who looks like me, it's not. Now, email, if you're on the email list, that is me. All right, hold up here. We gotta look. 10 seconds out. Gonna go ahead, get the copy trader engaged. I like bar 10. It is a sizable bear body, but it's really not because volatility today is pretty low. I'm gonna give that only 15 because we got, okay, that'll work. That'll do it. Put our stop up there, bring this guy down. And volatility is pretty low here, realistically. So that risk is only 36 points. Believe it or not. I know it looks big, but it's not. ATR here is below 22. So let's see what we get. Bears. Take us down through and see if we can take out some stops down near the low. Now, in that setup, you could technically wait for bar 11 here, which is the current bar to close. I liked bar 10. It was outsized. It was coming off of bar 9, which was not a great bar. So you could say, hey, aren't you a little bit early? Yep, I am. A little, like, early. But what does early really mean? Because there's never perfect timing. You don't understand. There's no such thing as a perfect trade because there has to be two sides. And if a perfect trade existed, no one would take the other side. Right? Because everyone would know that that's a perfect trade to the short side. No one would buy. So, perfect trades, if they ever pop up, they go away within like weeks. So don't look for the perfect trade. Just look for one that gives you a little bit of positive expected value, if not a little more than a little bit, and put it on. So here, probability is, you could argue, would be better on waiting for bar 11 to close. But by shorting it on the close of 10 here, I get a little bit better reward to risk if I'm looking to take out the stops right below 2, which, you know, ideally is the goal. But let's see here. So sitting short, baby. Take it down through, Bears. What you got? All right, now, while we're waiting, we should look at the counter argument. Right now, I think the strongest counter argument from the bulls, which are the enemy right now, is about that, right? But that's okay. There's always going to be that counter argument. Always. Again, no such thing as a perfect trade. It does not exist. Now, in hindsight, you could say, oh, well, you know, a big, giant winning trade, that was a perfect trade. Well, okay, but at the time, when they put it on, whoever put it on, the probability wasn't perfect. Right? If there's a risk of it not playing out the way you intend, then it's not perfect. Right? But you don't need perfect, man! The casino's not perfect! They have a 1 to 2% edge or something on blackjack, right? Look at the strip they've built. Beautiful. All right, Bears. About time to take that baby down through. Fall off a cliff! 200 points downside! Now, what I don't want to see here, again, is for those bulls to put in a little soft bull channel and reverse that big, big bear body of 10. By the way, bar 10 was the most sizable actual body of the day so far. Not candle itself, but it was the most sizable body. And it came right after 9 again. So as far as grading this setup, this would be a B setup for sure, not an A by any means, which is why, again, I only gave it 15 seconds, but we did get a fill. And you guys know, B minus and up on my grading scale is what I'll take in a funded. Or in the fundeds. All right, 11's going to close up there as a small wiki bull body. So let's see what 12 brings here. 12 is going to bring us a big old dump off. Just you watch. Oh, you sons of guns. All right, Bears, step on in. All right, quite the battle here. ATR 21.5, very, very low. Very low. Full range on the day. What are we looking at? It's less than 100 points. 80 points? 80 points is the range on the day. All right, Bears. No softball channel here. Take that baby lower. Let's take out those stops. Just below the wick low of 2. So, you know, again, I know it looks like a big ask out of this volatile market. And, you know, I'd say, out of this low volatility market. I wouldn't say that that's wrong at all. You know, I mean, really what this trade is the risk is about 36-ish points. Because if they take out the signal bar, wick high of bar 10, then I'm cutting it, we're moving on. But I'm also looking to stop hunt the low of 2. So basically, this trade on average is going to take, you know, a bit of time. Now, of course, if you get some volatility out of nowhere, it could be quicker. But when you're making an ask of, you know, 30 plus points, when the ATR is 21, 22, yeah, you can expect the trade to take a little bit of time on average, which is no big deal. That's totally cool. Totally within reason. Oh, Bears, you can't let them push us around like that. All right, let's see if they take out that wick high of 10, man. If they do, cutting it, slicing and dicing it up, and we're moving on. But it ain't over till it's over, man. Let's see if they take that out. One tick! It's over! Moving on! Hold on, we gotta let the copy trader, new feature here on the copy trader, automatically flattens. There we go. We're good. All right, moving on. 38 seconds out. Big bull body. So it looks to me, well, I mean, it's clear at this point, the bulls are trying to turn this into a soft bull channel, but the problem is, can they clear within reason the wick high of 7? That's the big issue here now. And if they can't do that, then this is very likely to just turn into a trading range. If the bulls cannot clear that up. So, let's see what they got. All right. All right, let's see if 13 can test that wick high. Now again, if they can't clear that, we might end up in just a big old trading range. 3 minutes. Oh man, you could really use some volatility influx. I was hoping that bull body would increase things a bit. It really increased the ATR like 1.5 points. If this does turn into a trading range, we're looking at about a 50-point wide range, which is fine. I mean, we can work with 50 points. As long as it doesn't tighten down into a wedge and becomes like a 15-point wide wedge. That would make our job a little bit more difficult. All right, minute 35 out. Let's see what 13 brings. All right, now I would need 13 here to keep pushing just a tad. I don't mind it above 25,880, but I'm a little, you got to think about that trading range. So any wick here at all, I mean, you see right there, the wick's already coming in. Bears are already trying to step in and say, I don't know, this is probably a trading range. But if the bulls can clean that up, then I will have to get ready. Yeah, Bears stepping in heavy. All right, 14, what you got? Good push, bulls. Let's take that trading range off the table. We need volatility is what we need. ATR 23. All right, 310 out here. All right, halfway through 14 here. Let's see what the Bulls got. Let's see what you got, Bulls. Nice clean clothes. I gotta stop them and buy a present for you, all wrapped up with a nice pretty bow and a kiss. But until that happens, I think those Bears are drooling over a trading range. So let's see what you got, Bulls. By the way, guys, Apex 80% off ends tomorrow, so load up. Unless you're a gambling man and you want to gamble on whether they run a Halloween sale, which who the hell knows? No one knows, except for them. But I'm not into that. So I'd load up. 80% off. $85 activation fees, single day pass. Man, if those numbers don't make you drool, you're not good enough to be doing this. Those numbers make it look tremendous. Your all-in cost for a funded is ridiculous. Code BIG, B-I-G. All right, guys, let's see here. Let's see if we can hit this. 15 seconds out. Copy trader engaged. Come on, big 14. Hold that baby up. As little wick as humanly possible. That's 15 seconds at best. Barely closing outside the wick high of 13, but that is a sizable wick, so that really needs quick resolution for me to actually care. Well, there you go. There's 15 seconds. No fill, no trade. Pull it. Next bar. See what 15 brings. All right, 15. Give us that push. Give us that push. All right, bar 15, what you got? Let's see if 15 can grow. Give us a nice, reasonably sized bull body, closing at least at a bare minimum. Ideally a bit higher. Above that wick high of 14. Minute 20 out. Man, volatility's kind of low, isn't it? ATR 22. All right, 50 seconds. See if the bulls can clean this guy up. All right, we're 22 seconds out. Gonna go ahead and get the copy trader ready to go. Because bar 15 here, if we get a nice clean close, ideally well above the wick high of 14 and very little wick, as little as possible, here on 15 itself, then I've got a nice little present there for the bulls. Place that guy, bring him down a tad, give him 15 seconds to actually give us a fill. That tried maybe one tick above the previous bar's wick high. So I gotta see quick resolution here. I'm gonna give that about 25 total seconds, which means 10 more seconds from right now. And if we get no fill, then it's no trade. Hold it, no fill, no trade, next bar. Let's see what 16 here brings. Well, right now, it would be very nice to, maybe for Trump to say something that gets everyone all riled up. You know, sometimes when you get around all-time highs, you know, it's great for America. It's great, but for traders, I mean, I'm not going to bullshit you. The best thing that could happen to a trader right now is the market fucking crashes. That would be the best thing that could happen to all of you, all of us. Because more volatility equals less efficient pricing equals more opportunity. All right, 70 seconds out. You're on bar 16. Nope. The $85 activation fees at Apex are until the sale ends. Listen, guys, if you have some kind of reason to believe that you are profitable, you have some kind of positive expected value, you have some kind of statistical edge, you need to stop spending weeks in the eval, dude. I don't know how else to say it other than just here's brutal honesty. You are never going to get rich, whatever the hell that means to you, whether that's $70,000 a year and you go live in a cabin in the woods, or if that's $7 million a year, or if that's $1 million a month. I don't care what it means to you. It's not going to happen if you're terrified of losing a $27 eval, a $33 eval. It's just not going to happen, big dog. I've said it once, I'll say it again. People that make hundreds of thousands of dollars lose tens of thousands of dollars. People that make millions of dollars lose hundreds of thousands of dollars. People that make tens of millions of dollars lose millions of dollars. This is a mindset issue, man. I don't know how else to say it. If you're like, I want to make, my goal is $1 million a year. Okay, great. That's a great goal. Great. You got to make about $80,000, $85,000 a month. Tremendous. If you're terrified of losing a $33 eval, but you're like, I have edge, I just don't want to lose $30, you gotta take a step back and think about what the hell you're saying, big dog. That's a problem. And that sale ends tomorrow, by the way. So we'll see what they bring. I don't know if they're gonna run a Halloween sale, nobody does, but 80% off is plenty. So you're either gambling or you're just loading up. Take your pick. All right, 3 minutes, 18 seconds out. Come on, bar 17. What do you got for us? Coming right back into the 20 EMA. And by the way, there is still an argument for a soft bull channel. That is the context right now. All right, minute 50. Man, I mean, okay, volatility is so low. And we've already tested the 20. Really depends how this bar closes up for me. If this closes clean, I think it's reasonable to take it. It's also reasonable to wait for bar 18. But if this closes wiki, then there's just nothing here for me. And then we'll for sure wait on 18. We also got to keep in mind the context is soft bull channel. All right, wick is about half the bar on 17. So, I mean, realistically, I have two options on 18, depending if it's a bull or bear body. It just has to be clean either way. ATR here is about 20. All right, halfway through this 5-minute bar on 18. Now, given the context is a soft bull channel. I do have two options. Again, a nice big bear body. I do still want to see if at some point today I can stop hunt the wick low of 2. But if that never presents itself, on bar 18, if bar 18 closed as a moderate to strong bull body, volatility is so low today that I could actually take that within reason. ready? All right, we are 28 seconds out. Gonna go ahead and get the copy trader engaged. Now, keep in mind, this is a look. The price action look, 3 consecutive bear bodies. In soft channels, if possible, if it's clean enough, I prefer to watch the price action itself. That is a weak close, which is actually preferred because I kind of want to watch 19 here to see if they do that. And if they end up doing that, then we're going to stay in the soft bull channel. But if 19 can give us a nice low close, then clearly the bears are trying to take this thing lower and we can look to try to stop hunt the wick low of 2 yet again, which I'm very interested in doing because we know there's a whole bunch of bull stops down there. But I'll only take it if we get it. All right, hey, quick break. I'll be right back. Don't go anywhere. All right. Welcome back. We are 3:15 out here from the close of bar 20. And let's see what 20 brings. Now, I don't want to speak too soon because it'll take it out of context for some people, but just listen carefully. If this bar with 21 cannot take out the wick high of 16, then we got to think of this. Okay? Now, if this shoots higher and closes at 25,910, what I just said is irrelevant. There's the nuance. But just a heads up, we may have to keep an eye on that. These soft channels turn into trading ranges a lot. It's really common. "65 seconds out." All right, there's a close of 20. Tiny, tiny little bear doji. So now we got to watch 21 here because we got to keep an eye on this if this soft bull channel just turns right into a trading range. ATR 20. I'd really like to see ATR hold above 20. Ideally, if we could get some volatility out of nowhere and bump that above 30, that would be tremendous. But if this thing dips down into the teens, especially the low teens, it's going to make our job quite a bit more difficult. Need the market to move to make money, don't you? Unfortunately. All right, 21. 4 minutes out. All right, 21. See if they can get well above the wick high of 16. Again, we gotta watch. There is a risk of a trading range just forming here. There's the break. Let's see if they can hold that. Come on, 21. "60 seconds? Alright, good close out of 21. I gotta watch 22. Risk of a trading range is still too high here on the close of 21, especially after bar 20. So if we get a nice clean bull body on 22 and a nice clean close, moderately sized, then I've got a stop limit buy. But, again, must I repeat myself? The risk of a trading range is still too high, even after the close of 21. Bear is trying to make that happen immediately. Come on, 22, what you got? Again, trading range. Trading range, trading range. That's why we can't get long on 21, man. Because very often the bears are going to do this. Yes, it does. You just have to change the way that you trade. I've gone over that in depth. Change things slightly. In trading ranges, with any kind of trading, but especially with RAM, when you're in a very clearly defined range, sideways range, not a soft bull or bear channel, when you're in a clearly defined, at least multi-test on either side, sideways trading range, you have to do your best not to bet against breakouts before you get at least one, ideally two closes on a consecutive bull or bear body sequence outside of that trading range. Now, I know half of you guys are like, what the fuck did you just say to me? I'm so confused. Keep working at it. For a lot of you guys, last week, that sentence would have confused the living hell out of you. This week, it made sense. You understand? That's progress. Okay, when you're in a clearly defined trading range, the probability of the security, whatever it might be, the stock, just the underlying, right? Breaking out on any given test, on any given attempt, is about 20%. So until you get a little bit more confirmation, right, in the form of 1 to 2 closes outside that are part of a continuation sequence, 2 or 3 consecutive bull or bear bodies, that probability stays 20% until you get that. Then it starts to increase a little bit. So if you're betting on breakouts before you get that, and you're like, I'm going to go 1-to-1 reward to risk. Well, if your probability is approximately 20%, you're hemorrhaging money. You understand? That doesn't make it, that logically, that the math ain't working. And I know probably at least half you guys, by the way, this isn't like to be mean or whatever. I mean, we're adults, right? This is because I want to see you make a disgusting amount of money. Just to, you know, prove to everyone in your life who said, why are you wasting your time day trading, that you're going to do it. That makes me happy to see, you know. At least half you, when you just heard me say all that, you're like, dude, what is all this? We're at all-time highs, man. You short all-time highs. Man, you guys got a big wake-up call coming. You think you're a genius now, you're 2 months into it, you think you got it all figured out. You are fucked unless you change your mindset and start thinking in terms of positive expected value, probabilities, and statistical edge. You're screwed unless you change that. Or if you stick with it long enough, losing, you know, talk to me in 3 years when you decide you need to revamp everything and you're extraordinarily frustrated. But I get it. I get it. I was the same personality type. You're not going to listen to me. You know, you shouldn't listen to me. I'm just some dude. But I'm some dude who's fucking been there. So maybe you should. All right, well, bar 21, too early to get long on, of course. We talked about that. Bar 22 is the attempt back into the trading range. Bar 23 is trying to tighten up that trading range, and now 24 is going to be very telling for us. So let's see what we get as far as 24. Variant, how do you treat soft bull bear channel versus horizontal channel? Yeah, you know what, Sword? That's talk for the tomb, dude. If I go on a 45-minute rant about the nuance of that on live here, 3/4 of you will fall asleep. So I'm not going to do that. But I offer commentary on that here and there all the time. And I would like to make it very clear, I'm not the guy that's going to hold back stuff at all. That's not me. I mean, I assume you've picked up on that by now. But, you know, we also got to be reasonable. There's some stuff that's really boring, that's really important, that probably doesn't belong on the live here. All right, 24, let's go! Get up and go, 24. What you got? There we go. Okay, now, 24, with the close of 23 near the high of the trading range, if we get a strong bull close out of 24, I can make logical sense of that, very much so. We're 2 minutes out. And of course, I would go ahead and risk the wick low of 24, because if we take that out, we're right back into the trading range, but you can see that this is looking more like a wedge than a trading range at this point with the low of 23, and 24 would be an attempt to break that. So I would look at it like this, you know what I mean? Now, some people would buy, like, oh, the wedge is going to break. No, it's a little early for me. So let's see if 24 can give us a nice, I'd like to see it grow from here. This is pretty low volatility. We're finally dipping below 19 here on the ATR. So let's see. The stronger the close out of 24, within reason, of course, the more likely I am to put out a stop limit buy and risk the signal bar of 24. Let's see what we get. All right, we ready? Come on, 24. We gotta see you grow. This is tight. 21 seconds out. Gotta get the copy trader ready to roll. And small little body here on 24, but if we can get a last second adjustment with a bit of a pop. That's wiki, but I'm going to give it 15 seconds. Just one tick above the wick high because it did close outside. If it gets quick resolution, a fill in the next 10 seconds now, that's worth, 12, 13 points of risk for me. But if it does not give me a fill, then that's no fill, no trade. We'll move on here. No fill, no trade. Moving on here to bar 25. Let's see if 25 can get a fire lit. Without the quick resolution, everything's changed. And then I no longer want to participate. But sometimes on a bar like that, you do get very quick resolution. And that's actually one of the better trades because you kind of seem to catch the early minutes of the volatility increase. So it's worth putting on if you can get a fill in 15 seconds on a setup like that. If not, though, it's not worth putting on. At least in my experience, underneath the RAM framework. All right. How we doing so far today, guys? How we doing? Kind of quiet. We're getting killed? No, I doubt it. Some of you guys are probably killing it today, huh? Green! Up 1100. Green. Good work. Good work. Alright, we might get something here on 25. Now, fair warning, the trades today are not unlikely to take their time, at least from here, of course. Especially our one from earlier. But there's a nuance to that, right? Because the signal bodies are going to be smaller. So if it's going to stop us, it probably won't take too long, which is not a bad thing. But with ATR below 20, man, things start getting a little weird, but we can still work with it. Below 15, it starts getting weirder. Below 10, it's time to walk away. At least on a 5-minute chart. All right, minute 35 out. Goodness, this bar has not even cracked 10-point range yet. Very nice to see a volatility influx right about now. And I'm telling you guys, you're going to see all over the news, all over YouTube, people talking about, oh my God, market crash. You know, again, market being at all-time highs, it's great for America. We love it, but it'll get back. And in the interim, maybe it's time to be a little selfish if you're an intraday trader. A market crash is about best-case scenario for all of us right now. Gets fire lit, gets some volatility, gives us some inefficient pricing to make money. All right, we're 20 seconds out here, and these bulls are wicking back. Keeping this body very, very small. Roll over here, 3 seconds. Okay. Very small bull, basically bull doji there on bar 25. Let's watch 26, see what 26 brings us. All right, 3.5 minutes out here on bar 26. With ATR around 20, is one mini too big for a 100K account? Well, I mean, listen, you're pushing it. My thought on this is, let's say you end up risking an average of 20 points. Okay, you'll say, all right, well, you know, risk is 10% the drawdown, which is within reason. But what people always forget is that when volatility is way down, you can't forget this part. When volatility is way down, your edge is probably not quite as good as it would be in a moderate or high volatility environment, right? So the probability, not dramatically, right? You have to think in terms of nuance. If you're going to be a trader, it's not all or nothing. It's not black or white. The probability of you going on a 7, 8, 9, 10 trade losing streak when volatility is lower and your edge, even if it's still good, you still have edge, but it's probably a little less than it could be in a low volatility environment. The probability of hitting that losing streak has now what? Slightly increased. Okay? This is all numbers, that's it. So that's your decision. It's not, is it too big or is it not? I don't give a shit. If you want to trade 7 minis in a 50, or I guess 6 minis in a 50K account, or 10 minis in a 50K Apex, dude, have at it. You are an adult. But then don't come crying to me. You better not show up in the chat and say, day trading's a scam. No, you fucking suck and you don't have any discipline. Right? And I say that with all the love in the world, big dog. I want you to win. So badly, I want you to win. But I can't force you to drink. You know what I mean? All right, 26, 60 seconds out. What do you got? All right, 10 seconds out. You're on 26. Man, at least if you're trading RAM, I hope you're not taking entries on 25 or 26, because there is nothing there. ATR tanking down below 17 now on the ATR. Again, ATR is average true range for anyone fresh to hanging out with us. Welcome. ATR means average true range. That's the average points, or I should say the average range in terms of points of a 5-minute candle based on the last 10 5-minute candles. Ooh, you guys are getting yelled at. Yeah, you know what? That's bullshit. Press the like button. By the way, does no one want free accounts? I've got a whole bunch of accounts to give away. One of our last winners at Take Profit was slanging a bunch of money out of the account that he got for free, which is tremendous. Hit like. I greatly appreciate it. Helps out tremendously. And we'll give away some free accounts. All right, 27. ATR below 18. See if we can get a bit of an influx going here. All right, bar 27 here, still hanging out in the little range. I mean, listen, guys, every time we press, we're trying to press into all-time highs, which, you know, every once in a while can lead to some euphoria, high volatility euphoria, which is great, tremendous when that happens, but, you know, more often than not, it can just slow things down. Which is what we're seeing a little bit here, but a nice volatility influx. that can happen at any moment, so we got to be ready. So if you look down at the bottom of the screen, just below the red line, right? That red line represents the ATR over time. And each individual orange bar represents the points in range of that individual bar, the one above it, obviously. Volatility is really, really, really coming down. Now, a lot of times when you see this, you eventually get an influx sometime midday or heading into the afternoon, ideally sooner rather than later. But this is bar 27. Let's see if we get a nice clean close out of 27. I'd really love to see it close above the wick high of 26. That would be tremendous. And if we can do that, then we've got a 28 for a potential setup. Let's see what we get on 28 here. Rollover coming. Good close out of 27. Now we got to watch 28. This is a 5-minute chart for anyone just joining us. You can see the bar timer down here, bottom right of the chart. No, you know what, Pete? As long as volatility, this is the truth. As long as volatility is reasonable, you can trade RAM any time of day. Okay, that's like any trading strategy. The lower the volatility, the harder it is to find edge. All right? Within reason, of course. If it's 400 points per bar, then clearly something's happening worldwide as far as news. And then things change a little bit. But the only times that I would encourage you to hold off that are typically during the day, well, obviously news, right? Like CPI, I wouldn't be trading at all, probably, unless you're trading a news-driven strategy, which we know news is approximately 50-50. So, holding off, I think, is the smart thing to do on news in general. Before 8:40 and or more reasonably 8:45 Central Time between the open, the first 10-15 minutes from the open, is a lot of institutional orders, so I usually hold off that time of day at least before I start looking for setups. And then, you can be in a trade for the 340 and or, more importantly, the 350 Eastern Time algorithm, but I prefer to be flat if possible. Especially that 350 Eastern Time algo, you can get a lot of unpredictable volatility, and some days it moves more than others, and it can change the feel really quickly from the trade that you happen to be in. Aside from that, you can trade RAM at any time of day as long as volatility is reasonable. What is reasonable? I think during the New York session, anything above 10 on the ATR you can work with. Above 20 is preferred, above 30 is best. That red number down here, that's the average range of a 5-minute bar here on NQ. All right, 243 out here on bar 28. All right, guys. Hey, back in a couple minutes. Don't go anywhere. Quick break. All right, welcome back. All right, guys, so listen, the market right now, I mean, very clearly the context here, we're in a tightening soft bull channel, right? That's what we're in. If you wanted to buy the close of 29, wouldn't be mad at you. Is it the highest quality setup in the world? No. But, you know, according to RAM, you could take a buy on 29, but then you also got to know, okay, you have two options when 29 closes. You can either buy the close of 29, which again, volatility is low, it's not the greatest setup in the world. Or, what I usually opt for, unless the range has been doing this for like 3 hours, what I usually will opt for is wait for 30, and if 30 gives us a nice strong bear body that closes like beneath the wick low of 23, I'll short it with a stop limit sell on the close if I can get a fill. 29 is too early to short in RAM, in my opinion. Now, you know, you could, of course, I always make the argument you can take a really early trade, but you are betting on a breakout, which, you know, crosses that line for me of no go, unless you're going to buy it and bet on the range. So you have options. You know, I think something that a lot of people get confused is that RAM is not like you have to do this. A lot of times it's, hey, you can take bar 2. Waiting for bar 3 is better for probability, but it takes away from your reward to risk, especially if you're in like a big full day's trading range. Now, if you wait for bar 3, guess what happens? Probability goes up, reward to risk sucks in a little bit. Doesn't mean the edge has necessarily gotten better or worse, but you have options. Okay, which is another really good thing about RAM, but it requires that nuance, and when you watch more and more charts, you're gonna get better at determining what you prefer to do. I go back and forth depending on what I'm seeing. And I think you guys kind of know what I mean by that if you've been around for any more than a few days. All right, 31, what do you got for us? All right, 3 minutes, 12 seconds out here. All right, we're 60 seconds out here. From the close of bar 31. All right, let's see what 32 brings here. A nice clean close, and we might have something for the Bulls. Got to see if they can press into all-time highs with a little more enthusiasm than they've been doing all day. It's been a really slow, soft bull channel grind here. Come on, bar 32. Give us a punch. I'll take a little bit of volatility there. ATR 16. All right. Well, ATR sticking around 16. We're 60 seconds out here from the close of bar 32. Bull's hesitating a tad to take this baby into all-time highs. All right. 32 gonna close up as a small little bull doji. All right, guys. Hey, ATR dip below 15. That's my cue to go hit lunch. Come back in the afternoon, see what volatility brings. I think we're gonna see an influx of volatility. ATR is gonna pop at least back above 20. All right, guys. Hey, Apex deal, 80% off. $85 activation fees, which is heavily discounted for lifetime activation fees, and single day pass with code BIG. BIG ends tomorrow at Apex. Go load up. Code BIG. All right, guys. See you tomorrow morning. All right? Hey, stay patient. Man, a day like today can take you out if you let it. Stay patient. Let the setup come to you. And when it does, hit it hard. Volatility will be back soon. Don't worry about it. All right, guys. See you in the morning.